Hey traders and investors, it's Serge Berger here. Today we're going to take a look at Whole Foods again. I had a whole bunch of questions come in literally just the past 2 days on Whole Foods. I'm not quite sure what sparked it other than just the fact that the stock looks awful, so I guess people want to hear about it. And fair enough, the stock really is broken. I did an update on Whole Foods. Trying to think probably at some point after the earnings drop in early May, so maybe a little bit less than a month ago. But I think it's definitely worth revisiting. So obviously Whole Foods, you see, beautiful uptrend here off the 2009 lows as most things else. And then really what happened is the stock took too steep an approach, ended up topping out last October, and pretty much ever since has been an absolute disaster. More importantly, after the earnings report here in early May, the stock broke. And we can draw a support line 100 different ways. In other words, we can use logarithmic lines as well. But if you kind of just try to connect as many dots as possible, you sort of get to this area here where we ended up eventually breaking through after earnings, and that's exactly and that sort of comes in at the same spot. So from my point of view, and I said this last time too, the stock is definitely not worth touching on alongside. With this stock, after a break like this, you usually tend to get at the very least consolidation, okay, sideways, and we've had that so far. After a break, a snap like this to the downside, I guess it was May 7th. And most of the times I would say you get continuation selling. So for me, you can see the stock continues to feel heavy. It continues to reject. The highs actually made a bit of a lower high here versus the immediate after reaction after the stock after the earnings. And now today is actually trying to pierce below support. I don't know if it's going to happen, but it certainly has a much better chance now than it did even just a few days ago. So, from my point of view, definitely not worth touching on the long side. On a short side, the stock has room, as I said last time, at least into the low to mid 30s, so 32, 33 area, which would be a very nice move lower. Otherwise, there is usually good opportunities to sell out of the money call spreads, although we have to look at the implied volatility a little bit. That may have been a better move immediately after earnings. So again, main takeaway, and that's people have been asking, would you buy it? I say no. This is not the thing to buy quite yet. This thing needs to show us some sort of bottoming action where the stock actually shows commitment for more than a couple days. Just like Twitter is the same stock right now, just has no commitment to the long side. So it's really just worth leaving alone, and of course giving it a try on the short side with defined risk when it actually caves lower. So that's as far as I'm concerned on Whole Foods. If you got any questions, as always, you can hit me up on Twitter. My Twitter handle is SteadyTrader. See you in the next video. Take care.